If you're looking for professional day trading education and high level trade analysis and dissection, you've come to the right place. My name is Pat Mitchell. I have been a professional day trader for the past 11 years, and I'm here to give you exactly that professional day trading education, all for free, right here on YouTube and on X. So, today we are going to have a little discussion on day trading pre-market ranges and why you do it some days, why you shouldn't do it other days. Is a very easy explanation. So give me a sec. I am going to fire up my charts and let's rock and roll. Okay, so now that we're in the charts, I hope you all had a wonderful day. Very simple, straightforward trade, and I'm going to discuss. So originally we were opening up when I started developing my trade plans at 9 a.m. As I always do, that's what these blue levels are for. They have trade plans associated with my technical levels, and they're always produced at 9 a.m. East, 30 minutes before the market open. We were in this area, and in this area, we had more than enough distance to take a pop short into the previous close. And if it was within risk tolerance, which it was definitely wide, we could risk up against the pre-market high area. So a lot of times, to go into the lesson before I get into the trade, pre-market, if you're shorting into or going long into the previous close, generally speaking, as long as the range isn't too wide on the day, that's what you can use as your risk. That's going to be great technical support or resistance. And is it foolproof? Definitely not, because it's only pre-market volume. But a lot of times, the beautiful thing is pre-market levels aren't just pre-market levels. If you take a look at the daily chart, they're generally topping out or bottoming out on the daily chart at proper technical support and resistance levels. So that's the type of pre-market levels that you want to be shorting or longing. It needs to have more than just one piece of the puzzle. That's where a lot of traders fail. They fail to put multiple pieces of the puzzle, meaning in this case, technical support levels or resistance levels all together, right? It can't just be one level where it's just previous close or just a whatever. There should be multiple reasons why you want to take that. And the more reasons why, that's when you will have more conviction, meaning size, into your trade, because the more levels that it touches or more touches on that level on the daily chart, the more size you can use because there is more volume in that area. That's why technical support and resistance works. It's due to volume at that specific price point. So with all of that said, very easy trade. And I said, because we did not open up below, our next level up from this, moving way up, was into trend, which is where it went to next. Now you're going to see it's a very small P&L day for me. For those that watch this channel regularly, you understand that this is obviously a small day. It's $137. But every Tuesday and Friday, I day trade live with a small group of traders from Tricktrades. And right now, at the very first day of the week, I will trade size that they are using at the time. That way, they're learning directly from a certain amount of size, how you would start in. And then on Fridays or a secondary trade on Tuesday is where I will use full size. Now, I'm going to go over my full size trade that I was looking for and we were waiting and watching for, but it just didn't trigger. So executed on the pop up coming into this first range, and then I was simply risking pre-market high. So that's this first execution. So entered, paid myself. Then I was patient. It popped directly into pre-market highs, and that's where I executed. Just an absolutely beautiful execution, and then simply paid myself. Doesn't look like much here, guys, but it is. This was 5 contracts. It's a very small position and still managed to lock in $137. I was holding no more than 5 contracts in any given trade. So beautiful, beautiful trade. And the secondary opportunity, I got to take the crosshairs off. You're going to see a trend up top, and you're going to see a trend up top on Qs and on SPY. Okay. Oh, just a note, because I got asked, where did I get those levels from? from I believe that was yesterday's video. I talk with my cursor, guys. Where my eyes are, when you see it moving just like this, when it wiggles around, that's exactly where my eyes are. That's where I'm pointing. Okay. It's not randomly just like moving around here. So up here is the trend, and it triggered beautifully on SPY. The problem is it did not line up with Qs. If you take a look, Qs still had quite a bit of room to run. Now, it ended up pulling down that 20 SMA later on in the day, and that's where I wanted to start in. I wanted to start into the 20 SMA on a straight push up, and then add into trend and risk off of this. It was going to be wide risk, but that was the live lesson that we were looking for. It didn't trigger. SPY triggered, but because on a secondary trade, I want better. I want more pieces of the puzzle, so to speak. I want multiple things lining up. I don't want it to just be just a trend. Okay. I've already locked in. Remember, from a professional mindset, it's not about more, more, more. It's about paying your bills. And I think that's a lesson that gets lost on people. When you are actually a full-time trader, and this is how you make your money, this is how you feed your family, this is how you have a roof over your head, this is how you pay your bills, you need to be thinking about that. Now, it shouldn't come into a bunch of decision making, but it needs to be in the back of your mind that if you have already locked in, I don't care if it's $5, $10, $100, $10,000, it doesn't fucking matter. This is where people get greedy and they're not content, and they lose it all. They will not be around long term. People want to argue with me with this shit all the time, and I just laugh. It's like, stop arguing. You're the one watching this shit. I'm the one teaching it. So just zip it and listen, please. I'm trying to fucking help. Let me help. So with that, I want SPY and Qs to trigger at that level at the same time. Now, SPY could have held this level and triggered, and Qs could have kept coming up, and SPY would still hold the line. That's what I was looking for. It didn't do it. That's fine. And then you can see we actually had a trigger down here, but at that point, it's already approaching 10:30, and I only trade the first half an hour to 1 hour of the market open. That's it. That's all I'm looking for. And that would be wise for you guys to do the same. And I'll tell you why too. You guys are getting lots of nuggets in this recap here today. When you have the market open within that first hour, a lot of people say to stay away from the first 15 to 30 minutes of the market open. If people say that, get away from them. They don't know what the fuck they're talking about, straight up. And I'll tell you why. At the market open, you're going to have a group of traders trading, okay? And it's a smaller group. You're going to have less, not necessarily volume, but less traders making decisions, okay? Let's say it's 100 traders trading SPY. We all know that number's low. Just bear with me. So at the first hour, at the first 15 minutes of the market open, there's 100 traders. The first half an hour, that increases to 150. The first hour, now you have 400 traders. After that, more people are able to trade, more people are getting in. Now you have 1,000. Do you see how it increases the variables of action of what the market can do? If you only have 100 people making decisions, you're hoping that those decisions are valid and not random or just bullshit decisions. They're proper professional decisions. As the day progresses, you're going to have more and more people. So what would you rather have? A coin flip 100 times or a coin flip 1,000 times? What gives you better odds? 100 times. Now, we're not talking coin flips here, but that's just the best way to put it. When you have 100 people, so to speak, 100 people in a group, they are going to make 100 decisions, right? You have 1,000 people. Now you're going to have 1,000 decisions. It's too many variables. And that's why it is so fucking crucial. You do not trade after that first hour. And personally, I generally don't execute trades after that first 30 minutes. It needs to be, and I'm not saying that I won't. People get this shit twisted all the time. They don't listen to the fucking words that come out of my mouth. I'm not saying all the time, 100% of the time. 100%, I will never say 100%. But generally speaking, I will not trade after that, and nor should you. Are there certain instances that you can? Absolutely. There's lots of potential opportunity out there, but you need to be very specific over what opportunities you're taking. If not, you're fucked. You might as well just torch your money now because you will lose. And anyone that wants to debate me on this, you can go ahead, but I'm here and you're there. That's it. And I know I sound like I'm an asshole when I start speaking like this. I'm trying to get through to the knuckleheads that don't want to fucking listen, because even knuckleheads have a fucking shot at this if you get your head out of your ass. So if you want to work with a coach that actually gives a shit and can show you how to do this, come to tricktrades.com. If not, that's fine. No sweat, guys. Continue enjoying my free content. That's why it's here, right? But you do have to like and you do have to subscribe if this is the second time viewing my channel. If you are not subscribed and you continue to watch these, you are a taker. And I would love to believe that you watching this video right now are better than that. Prove me right. I'm sure you're better than that. Don't be a taker, guys. You're getting high quality professional education for free. Subscribe, and you got to like. Adios. Have a good one, guys. Have a great evening.